Welcome to our morning call. This call is for your guys' development. I just have beautiful friends like Mr. Steve Lemmons is going to be joining us here in a minute that are willing to give of their time, their expertise, and allow you guys to ask questions. I was on a phone call yesterday with Steve Lemmons, who's my financial partner. We talked about that earlier this week, the importance of having a really good financial partner or a lending partner that you can bounce questions off that will give information that is beneficial to not only the cause, but your client's end goal. So, and I've done, I don't know how many hundreds of deals with you, Steve, now through coaching and everyone else. You're muted. It's okay. It's his first day on Zoom.
Yep. It is my first day on Zoom. I'm a newbie.
So, but Steve's been licensed in loan origination for the better part of what, 70 years now?
Yeah,
60?
something like that. I'm only 50, but I've been in 70 years. Feels like it.
That's how good he is. I figured alongside of the conversation we've been having this week on appraisals and repairs and negotiations and setting things up, I was like, you know what? Fuck it. It's Friday. Let's bring Steve in. Let's have a little financial discussion so you guys can, hear a little bit what he has to say about what's happening in the market, what he's seeing. This is a general conversation. Even though he is licensed in here in Arizona, he's also licensed and has team members in every state. So if you guys have a need or a resource, this is kind of my offering to Steve is, hey, you get to be around my agents and potentially pick up more business there. But I want you guys to just take part in that and hear some greatness.
A little bit of an update on rates first, because that's a hot button right now. So interest rates are actually, as everyone is probably well aware at this point, rates are down from their peak on average about 1 3/8%. I'm going to give you averages versus specifics because every market can be a little bit different. The average 30-year conforming or conventional fixed rate is somewhere around the mid sixes right now, right around 6.5 to 6.6. On a FHA loan, you're looking at right around 6.3 to 6.25. And then VA loans are hovering between 5.99 and 6 1/8. So interest rates are down quite a bit. Dan and I were discussing yesterday. He's like, what are you hearing out there? Just so you guys know a little bit about a background about me, I am obviously located in the Tucson market. I'm originally from California, and my background is I have been on both sides of the industry. I've been actually 3 sides if you count new builds. I was the sales and marketing director for a Fortune 500 builder. I was a real estate trainer for real estate agents for probably about 5 years, and I've been in the finance industry for approximately 26 years. I am probably the 3rd or 4th biggest loan officer in our county locally. I do a lot of training now, and teaching agents how to how to understand the changes that are coming in the market. It's easy to talk about the things that are happening right now, but it's where it's leading to. And really, his question was, what am I seeing in the marketplace? And there's been a new phenomenon that you may or may not have felt in any of your transactions. Over the last 90 days, 38% increase in cancellations in contract. Number one reason, about 2 to 3% of it is cold feet. 5% of it is they didn't qualify. And about 90% of them, they weren't willing to buy the home in the shape it was in due to Binzer negotiations. I don't know what you guys call it in your thing, so I'm just going to call it repair negotiations. In Arizona, it's a Binzer. But during the repair negotiations, there are a lot of things coming up. And the seller's stances are quite interesting because it's kind of interesting. I've got to the point in my career where I just, talk to the listing agents and I ask them what the seller's thought process was. We're hearing a lot of this, and it's a very, I wouldn't say it's like detrimental, but it is somewhat concerning. I asked the listing agents why they are not willing to do these repairs. Number one, either they don't have the money, or number two, they don't feel it's necessary due to market conditions. So this is going to be really a point in the road that it's going to be where the market goes, because here's the unique thing about the buying of homes in the market in 2024. Up until this point, the baby boomers have been the number one buyer of real estate for a long time. They have the most wealth, they have everything. A very subtle change happened in 2023. Millennials and Gen Zers became the overwhelming generational growth. So they have more people in their generation than any other generation. That includes Gen Xers, Boomers, all of them. They eclipsed us last year for all of us that are slightly over 40 years old. So anyone that's under 40, they are now considered the biggest population. This generation, and it's going to be generalizing, but you have to understand how they work because we do look at tendencies. They are somewhat very strangely conservative financially. They don't look at what they want, they look at what they need. And these buyers are savers. I've had 23 and 24-year-old buyers come in having $50,000 in the bank. When I was 22 and 23, I didn't even know what that meant. I could barely save any money at that time. They've done very well at saving. They're extremely conservative. They're extremely credit conscious. And they're also, when they're looking at buying homes, and they are very active. They very much like technology, but in addition to that, everyone thinks that they're straight technology driven where they want to get text messages, all this stuff. They do like a personal touch. They want to have a conversation so that they can share with you their ideas, their philosophies, and what they are looking for. And it is our job to listen to them. And the one thing that I am hearing overwhelmingly is that why would I ever, this is the number one question I get, why would I ever buy a home that the seller hasn't taken care of? It's a really important question. In different markets, buyers will go out and buy homes. They're just like, I'm thankful I got a home. During COVID, I'm thankful I got a home. But when you really start to get to it, when you're spending, let's just say the average price point across the country is 470 grand. I heard somebody say they're in Denver. I mean, it could be close to 700 plus up there. California, San Diego, where I'm from originally, the average price point is 1.26 million. It really begs the question, why would you buy a home that hasn't been taken care of? Because not only could there be a bad roof, or there could be a bad heating system or a bad AC system, what else haven't they taken care of? And this is where this generation of buyers mentally goes. So as listing agents, I would say that it's very important that we start informing sellers of the buyers that are out there because they are changing quickly. The Gen Xers and the baby boomers, although they're buying, a lot of them are sitting on the sidelines right now because, truth be known, due to economic conditions, inflation, all those things, they're really not wanting to go out and put their toe in and go, okay, it's time for me to, jump back in. They could be at very low rates right now in their current home, a lot of different reasons. However, the millennials and the Gen Xer or the Gen Zers are really coming out in force. And 70% of my applications right now, and I do about 100 applications a month. So 70 out of 100 are under 35 years old. That is a pretty impressive number. In 2022, it was about 48%. So in 1 year, it has grown almost 20%. They expect that number to grow next year as well. So if this is our new buyer profile, and the sellers of most of these homes tend to be different generations, normally older generations, there's a gap that we have to somehow fill to make sellers and buyers come to a consensus, or the market's going to get extremely difficult, which is why I think we're seeing a lot of cancellations right now. And it is across the country. I think the cancellation rate across the country is almost 28%. In Tucson, for me and my branch, and I have 4 branches in Tucson, it was 38% in December. That is massive. And in ours, it was overwhelmingly seller and buyer couldn't come to an agreement on repairs. So as we head into this market in 2024, and I am not here to be positive, negative. I am more of a realist. So my background, my degree is in economics, and my minor is in finance and accounting. So the market, it's going to be strong this year. It's going to be good. I don't think it's going to be a bad market. There is a very real chance that we will head into a recession. And other than the 2008 mortgage meltdown recession, recessions are good for housing. They tend to bring interest rates down. People tend to look at things they need versus things they want, and a need is a house and a home. So those are all good things for us. Now, the one thing that I want to dispel, a rumor or a myth that I hear, and I hear it every single day. I hear it from loan officers. I hear it from real estate agents, and I get it. You know, sometimes we get into the hype of things and all this stuff, but it is somewhat fear-based and not necessarily going to be reality in 2024. There's this major conversation that when rates go down a little bit further, that it's going to become this bidding war and just melee again in the marketplace. There's one major factor that is missing in that conversation. Whether or not we agree or disagree, and you hear the government numbers, inflation is coming down, inflation is this. What you don't hear is that inflation has gone away and it's going the other way. So since 2021, real inflation, not the numbers you hear, the 3.8 from the CPI, the 3.2, since 2021, inflation overall is about 18%. So that means the average person is spending 18% more on the same goods and services they were in 2021. That's a big number when 90% of the marketplace, let me say that again, 90% of the marketplace lives paycheck to paycheck. Now, home buyers, it's about 50 to 60% of the marketplace lives paycheck to paycheck. So rates coming down will put them back into the marketplace, especially in a looking scenario. But when you have a buyer who's pretty tight financially, they have some money saved for down payment, and they walk into a home that they see hasn't been taken care of, needs $15,000 to $20,000 of work on it. That's going to be a deal breaker for them, even if they love the home, because they can't afford it. And the new buyer is not willing to take on, this new generation of buyers is not necessarily willing to take on economic risk. They have had the luxury of parents who are probably the wealthiest parents of any generation. My parents were not wealthy when we were kids. They were broke. We lived, my parents were literally like, you're lucky there's food on the table today. And it was a general consensus of where I grew up, and I grew up in California. In today's world, kids, I mean, they have so much access to things on it, and they've lived a pretty decent life for the most part. So they don't want to take economic risks necessarily in the marketplace. So it's going to become very important as real estate agents, lenders, financial advisors to really educate who the buyer pool is walking into these next 3 to 5 to 10 years. Because the reality of these buyers, they're not going away. The baby boomers are going to shrink every single year. The Gen Xers, unfortunately, haven't done the greatest job of accumulating wealth because they've been taking care of their kids, and their kids don't want to see any of the struggles that the Gen Xers are going through. So we're seeing a lot of this transition and this migration into a conservative buyer in a very young, socially liberal buyer pool. So they don't necessarily care where they live. They worry about safety, obviously, those kind of things, but they worry about their financial setup to make sure that socially they're not going to be harmed, so they can go do the things socially they want to do. As much as we see them online and social media, there's a whole avenue that they just want to do things socially. They like to spend their money. They don't want all of their money wrapped up in a home. So as we see this go forward on it, I'm curious to see how 2024 begins. Sellers are starting to get a little bit of a hint of the marketplace, but in reality, it's really going to become part of the agents, loan officers, financial, analyst responsibilities to educate them on what is happening in the marketplace. I think it's going to be a very competitive market. I don't think there's going to be multiple bids happening on homes when rates, go down another 0.5% or wherever that magic number is. And for every 0.5% interest rates go down, to give you a little stat, it adds about 2.5 million potential home buyers into the marketplace. 1% is about 5 million, 0.5% is about 2.5 million. So the opportunities are there, but you're going to see a lot of these negotiations come on, and it's going to be very important for us to set them up with the right expectations on our listings, setting them up with expectations, having conversations that we haven't had to have in a long time, because during COVID, if the home was standing, it was perfect. And that has changed quite a bit. So that's really where we see the market going. It's going to probably get a little bit more drastic in that direction as we've seen this recent trend, because the trends are not normally short term. They tend to be longer term trends that are leaning towards this direction. So I see 2024 as being a very strong purchase year. I do see buyers refinancing to eliminate some of their debt. But the market overall, I think, is going to be very strong. The only myth that I see, or projection that I see, that is somewhat inaccurate, is that it's going to become a bidding war scenario again when rates go down, because of the effects of the economy that have had on people over the past 3 years is real. I feel it. I think everyone, if you don't say you feel it, it's a little strange. I mean, I still go to the store and I look at I go get dinner, where dinner used to cost $25 at the store, and now it's about 40. You see all those things and they start to weigh on people. And that is going to be the biggest thing that has people still on pause a little bit. But if they see opportunities, they see good value, we build value the right way, I think there's a lot of opportunity for 2024. And that is pretty much what I wanted to talk about today. Dan, anything that you want me to add in our conversation yesterday, I'm more than willing to, but that's kind of what I was thinking. And if anyone has any questions, let me know.
I think it's time for you guys. If you had questions or any insight, like let's probe in here. As I said, he's got a ton of knowledge when it comes to the market, not just, hey, I can make loans happen, but also the fact that he's been on both sides of the agreement, where he's been in your shoes, he's been in my shoes, running teams and taking care of training and development. It's helping you understand a little bit more of the puzzle that you're trying to put together. This falls directly in line with the conversations we've been having the last couple of days about repairs and these requests and creating that. How many of your sellers out there right now have deferred maintenance? And by definition, deferred maintenance is shit you didn't do. Most of you.
Yep.
Right? Well, right now we have a more scrutinous pool of buyers that are not wanting to take on these liabilities. I have a seller just last night, at like maybe 20 minutes after I got off the phone with Steve, we got a text from us. The buyer's agent said, hey, they're going to pass on the house. Thanks so much. And I said, why? I'm just asking, want feedback. Well, it's too big of a project for what they're thinking about. And I said, okay, well, what do you mean by that? Well, updating the countertops and the kitchen, and the windows seem a little bit old, and the roof looked like I had some work on it. And so I just screenshotted that, sent it to my seller, said, this is the feedback you're getting. And he goes, well, tell him to get me a bid. Maybe I can credit him that amount to get that work done. Because as houses sit on the market, sellers become a little bit more lubricated to the decisions that they need to make. Because like Steve was saying, back in the heyday of COVID, we talk about it like it's a flashback to wartime, but it really was. If the house was standing, that was it. You didn't have time to think about if you wanted the house or not. You needed to check for a pulse as you were writing a contract and pray to God they could qualify. But now we have people that are like, well, let me think about it. Let me scrutinize this. Let me look at the details. Let me make sure I'm making a sound decision. And every one of you, licensed or not, will have a fiduciary responsibility to the clients that you represent to show them the things that are critical. And the roof, the AC system, the water heater, these are all massive, massive, massive mental hurdles for people to overcome. Raise your hand if you've ever had to put a new roof on a house that you lived in. 3 years, maybe 3.5 years. Jake wasn't sure.
Well, it was mine. I wasn't living in it though, so.
But that's the thing, is it's like it's kind of a huge undertaking. Like, you're like, shit. Most people, here's the thing. I've been in the market a long time. Thousands of houses I've seen come across my desk. Most sellers don't fix the roof until they sell the house. And then they're pissed off that, oh my God, 10 grand. Now it's 20 grand. But, well, dude, you've lived in it for 25 years. You've never done anything. It's like driving your car and never getting an oil change and being mad that it broke down. When you're having your conversations with your sellers, make sure we're outlining that there's a new buyer pool. I absolutely love that we're talking about how there's a dynamic shift in the buyers right now. Does it help you when you know who's out there buying houses, how to present to them?
Yeah.
Right? The millennials, my generation, yes, I'm a millennial, I hate it, was always seen to not want to be homeowners. But then something changed in the last 5 years where that has changed, and they're like, okay, well, let's go after it now. Let's move out of mom and dad's house and find and buy our own house. We're 35, it's time.
And does anyone know what changed? It's very simple. Do we know what changed?
Prices.
Rent.
Yeah.
Rent has gone up 37% in 3 years. Dang. Massive number.
What doesn't go up when this, right? Your mortgage payment never changes. It may fluctuate with taxes and insurance, but the base payment stays the same. If you have a fixed interest, I'm just saying. You have an arm, you're dumb. Don't do dumb things. What other questions do you have? Come on now.
So I'm sure you've been in a market like this before. Maybe. Have you? And how did you deal with it?
Is that for me or Dan? Is that for me?
For you.
For you.
So I've been in, and I'm going to call it a transitional market. So this market is going to be very different. So the doomsday side of what you hear in transitional markets, I don't think is going to occur. We still have an inventory issue, but what it is, what's unique about this market, and I'm going to compare it more to 2000, which that was a long time ago, but that's the last time we had a slight recession. The market was still pretty good. Unemployment was really good. You know, all of these things, the factors were very similar to it. The one thing that I will say that got me through that market is that I really had to dig in to what buyers and or sellers were looking to accomplish. And I'm going to use an example of a buyer that I have with Dan. Buyer found a home. He loves the home. It's $320,000. He's a first-time home buyer. He's a young executive, makes darn good money. He qualifies up to about $450,000. His limit, again, we pre-qualify buyers. This is the problem with the market today. We are order takers instead of being of service to people. There's a big difference between this. So what we did is I broke down and he's like, all right, I love this home. I sent him some numbers to start a conversation because I want to get them talking. If I can't get them talking, I can't figure out what they want. I can ask questions all day long, but the millennials are more researchers. They like data. They want data, and then they bring questions. So I give them data first. He started asking questions. He's like, well, here's my sweet spot, Steve. It's $2,100 a month. This particular home's been on the market 60 days. It's in really good shape. We're not necessarily concerned about repairs or anything like that. But to get him to that $2,100 payment, because he only has 3% down, we need about $14,000 in concessions, so about 4.5%. This market's been on the home, it's been on the market about 60 some odd days. This kind of conversation is very important that your lending partners are having with your clients. Not only are they having them with your clients, that they share them with you. The more that you're in tune, the more successful you will be in these kind of markets. It has not affected me that much, this market, mostly because everyone tends to, they get a prequal. They're like, okay, they're ready to go. Let's go get them a home. Nope. Now we have the time to dig in deep and really start to get what they want and what they're looking for so that we can be of service to them. And in these kind of markets, I will tell you, the number one thing that's going to drive your business is being of service to others. And I don't just mean being kind to them. That is a given. If Dan will tell you anything about me, I spout kindness and love and all that stuff all day long. That is really why I do it. I'm talking about getting into the why on why they want to buy, where their comfort zone is. And really, the one thing about this younger generation, you are not going to sell them out of their comfort zone. Please stop trying. It is not going to happen. They have a conservative financial nature that I haven't seen since the boomers started buying homes. Because my generation, we're like, woohoo, let's just go for it. We're like Wild West cowboys and cowgirls. But this younger generation is somewhat surprisingly very conservative. And you're not going to talk them out of their budget. So it's really, what can we do to find what they're looking for inside of the constraints that we're dealing with, instead of walking out there blindly. And I think that's going to be a huge part of everyone's success in 2024, is really digging in and going back to the old school sales ways of really digging in, figuring out what they want, figuring out what their needs are, figuring out why those are those needs. The whys are important because that's their purpose on wanting to buy a home. Everyone's purpose is different and none of them are wrong. It's just their purpose. But I think that's where that success, and that's what helped me in 2000. And it's definitely helping me now for sure.
So I hope you guys got something of value out of today. Would you like me to have Steve back on in the future?
Yes.
So
Yes, indeed.
I want to make sure you guys have the level of expertise that you need to be successful. And this is 100% going to help you be a better agent. We're not just running out there to try to tag a house to a buyer. We're out there trying to match needs with solutions. So real estate is all about the relationships that we have. So we need to go out there and ask better questions, form better relationships so that you can have a shift purple business.
Okay.
Because if you can get shifted out of this market, you were riding the tide anyways. Weather the storms. Be good. Be awesome. Be fantastic. Enjoy your Martin Luther King Day. We will not be here on Monday. So that's a 3-day weekend for you. I know you guys are going to miss me on Monday. Deal with it. Just know that Monday you got to do a mindset reset and you'll be fine. If anything, check out my YouTube channel. These videos are up there. Share them with the people in your market center that are not joining these calls and get them on there. This is not to bolster my ego. You guys don't pay to be here. This is not an ad revenue space for me. This is me providing value to the people in my company to make sure that we weather the storm and we make more money than the people down the street. Okay?
Dan
Awesome.
and him.
Thank you, Dan.
You.
All
All
right.
right, guys.
Thank you.
Love you. Mean it. Big high five.
Have a great day, guys.
Thanks.